There is a huge opportunity with Alibaba stock, and in this video, I'll answer, is it too risky to invest in Chinese stocks? Is Alibaba stock a buy right now? And my price prediction on Alibaba, because this stock is a top 10 stock that I researched and watched, because specifically Amazon and Alibaba are both e-commerce giants operating largely without physical stores that I have a lot of conviction in. To be precise, Alibaba is China's Amazon, so I continue to value the stock and look for any dips to add to my position. Before I jump in and flood your pockets with money, make sure you like that smash button for Uncle Henry. I do want to let you know that in September, while the market was down 4.5%, my private Discord was actually up 2.5%, and my personal portfolio was up 4.6%. I have better long-term results than anyone else out there, and I'd love to have you join the program if you're ready to learn and see results with my team and I. You can, as always, just submit an application for a free call with my US-based team below. All right, let's start high level and work our way down. You probably know that China is scrutinizing companies more closely across broad areas of the economy. The Evergrande episode last week shows just how risky Chinese investments have become, and yet how integral its marketplace is to the global economy. The news that the property developer had missed an $83 million interest payment sent shockwaves rippling around the world. The market in September pulled back in the US as well, and we have actually seen the Dow Jones and all of the major indices pull back. Online education and tutoring companies were banned from making profits. Regulators also limited foreign investments in their stocks, and the Didi Chuxing ride-sharing app was kicked off all app stores in the country over allegedly cybersecurity concerns. This ended up crushing parent Didi Global stock. Chinese companies that had recently IPO'd on US exchanges came under the magnifying glass, perhaps as a warning to other companies considering listing in the US. What I noticed is there's significant risk associated with investing in China. However, I also see tremendous opportunity at the very same time. Alibaba stock has declined 40% over the past year in a downtrend since basically 2015. A stock's past price movement can bait investors into thinking that a stock is expensive or that a stock is inexpensive. In other words, the stock is down 40% this year, so it must be a good time to buy. This can easily prove false because there's plenty of reasons a stock price could swing lower, but generally, if you're patient, eventually a stock gets just too cheap to ignore and it becomes a very good value play. At $160 per share, I added some Baba stock, and I'm continuing to add as it goes lower. I also like to invest in stocks after doing some relative analysis to its peers. Let's compare Alibaba with Amazon, a peer with a very similar business model in the e-commerce and cloud services, and a parallel leadership position in massive markets. Shares of Amazon have traded at a price to sales ratio in the low to mid single digits ever since the dot-com bubble bursted nearly 20 years ago. Alibaba began trading on US exchanges in late 2014 and had a price to sales ratio of more than 24 in early 2015. Could you make the argument that Alibaba deserves a premium over Amazon? Well, sure, it's grown revenues at an average rate of 48% per year over the past 5 years versus just 29% for Amazon. Price to sales ratios and growth is exactly what I look for, especially in technology companies, because you can't accurately assess their price to earnings ratios since many of these companies are growing so quickly they are not actually having an accurate price to earnings ratio because the earnings is so small, or in most cases it's negative because the company is investing in the business. But I don't think it's easy to justify a valuation that is many times higher than Amazon. If you track Alibaba's price to sales ratio since 2015, you'll see it has been well on its way downward. The decline in Alibaba shares isn't necessarily an anomaly. One could say Alibaba was more expensive and a pullback was needed. And I agree, but at $160 per share, I start to find the stock very attractive for my capital. I do expect Alibaba's short-term price action will remain unpredictable, but over a long enough period of time, revenue growth will prove more important than a price to sales ratio or really any ratio out there. That's the reason that Alibaba was trading at a premium, but is actually no longer trading at a premium anymore. Revenue growth is the primary driver of long-term results. China's GDP is expected to grow at a compounded annual growth rate of about 5% through 2026, whereas the USA's will be below 2%. I'm paying close attention to the opportunity and risks in this stock. Like everyone else, I can't predict what the CCP or Alibaba's competition will do. For some investors, that's enough to make them stay away. However, investors should also consider the risk of not investing in emerging markets, which often outperform outperform developed markets for long periods of time. And that's because the emerging markets have more opportunity. There's more jobs being created. There's more people coming from the suburbs into the rural areas where there's more money. And technology is improving the human factor production. So Chinese economy went from agriculture to manufacturing, and now they're selling their minds. They're selling their time. They're selling their expertise. They're selling their services. They are doing such a good job at growing GDP per capita, and that's only going to increase spending in the economy. And that's why their economy is growing above 5%, while USA's economy is stalling a bit because it's already a developed economy. Now, I want to discuss my long-term price target on this stock so we all have a perspective that is valuable and we can see the bigger picture long-term. I personally believe this is a $1 trillion company. Alibaba suffered some serious setbacks over the past years, but its core businesses are still growing. In fiscal 2021, which ended this March, Alibaba's revenue rose 41% to $109.5 billion, as its adjusted net income, which by the way excludes the antitrust fine, increased 30% to $26.3 billion. Its core commerce revenue rose 42% as its cloud computing revenue increased 50%. Analysts expected Alibaba's revenue to rise 29% this year, but for its adjusted EPS to decline 26% as it relies more heavily on its lower margin retail businesses. But the golden opportunity that I found and the reason why I'm making this video is based on this one fact. Alibaba stock trades at 20 times this year's earnings and 3 times this year's sales. Amazon, on the other hand, which is growing at a similar rate as Alibaba, trades at 65 times this year's earnings and 4 times this year's sales. That's exactly why I'm very bullish on Alibaba. I believe the stock is worth $1 trillion in the next 3 to 5 years, and they're going to execute because their leadership team is just as good as Amazon's leadership team. That was my concise analysis on Alibaba stock. I believe it is a buy for me, and I'm adding to my position. If you want to see my live trades, my option signals, have access to me, 2 different coaches, a licensed CPA, you can book a free call by submitting an application in the first link below for my private option Discord. Thank you so much for watching, and I'll see you guys in the next one.
No one ever sees me.